Piedmont Lithium is at the cusp of production with its partly owned Quebec operation coming online in the first half of this year. CEO is Keith Phillips. Keith, welcome back to Kitco.
Michael, thanks for having me on again. It's always good to be with you.
Catch us up with the Quebec operation, Sayona Mining. What is it and what's planned?
So Sayona Mining is an Australian company. They're our partner in Quebec in the Abitibi region. We invested in Sayona about 2 years ago, January 2021. We own about 14% of the parent company, Sayona Mining. We own 25% of their operating joint venture called Sayona Quebec in the Abitibi region of Quebec, near Val d'Or. We then, in the middle of 2021, announced the acquisition of the North American Lithium mine and facility, which was a past-producing asset, which is we're now putting back into production jointly. We hope to be back in production sometime in the next few months. So we're very excited about that. That's the most advanced lithium asset in North America by far, and we're coming to market at just the right time. So we're really excited about that.
Now, it's a miner, and also you've got production facilities as well, too. So you're going to be able to turn around and be able to provide material to battery producers, correct, Keith?
Yeah, so the three stages of our business, there's the mining, there's the spodumene concentrate production, which we're putting back in place at NAL, should start up production sometime in the March, April, May timeframe. And then there's further downstream chemical production. There's a partially built facility there in Val d'Or, or at La Corne. That is a pre-feasibility study is being done to consider the possible restart of that. But one way or another, we do hope to go downstream in Quebec at some point.
I want to talk about downstream, but let's go across the Atlantic first and then talk about the Ghana operation. You're looking at production before mid-decade.
Yeah, I certainly hope so. We're partnered there with Atlantic Lithium. It's an Australian company listed on the ASX and on AIM. We're earning into a 50% interest in their Ghanaian operations. There's a project called Ewoyaa, EWOYAA. Really wonderful, large and growing, high-grade DMS-only opportunity in spodumene concentrate. It's a mile from the Atlantic Ocean, 70 miles from a major port. So it's by far the best located asset in Africa, lithium project in Africa. And as soon as we get our mining license, which we think will be later this year, we think we'll be in a position to put shovel in the ground to begin construction there, and hopefully be in production late 24, early 2025. So we're very excited about that as well.
Now that dovetails with what's going to be happening after mid-decade. That's when you have your downstream production that's going to be coming online, Keith.
Yeah, we have two plans for U.S. downstream plants, lithium hydroxide plants. The first we'll build will be in Tennessee, in eastern Tennessee, in a town called Etowah. That will be a 30,000-ton hydroxide plant, the biggest ever built in North America. The intention is to have that plant fed with spodumene concentrate from Ghana and possibly Quebec. And we are advancing very rapidly through that process. We hope to be permitted in May or June this year. We hope to complete front-end engineering design April, May this year. And then we'll really be just focused on funding, which is a big project for us in the first half of this year. It's around a $600 million project, so it's a considerable amount of capital. But we hope to be in construction the second half of this year. It should take 2 years to build. So producing lithium hydroxide the back half of 2025. Again, that'll almost triple existing North American production of lithium hydroxide. We only produce 15,000 tons a year in this country. With our plant, we'll go to 45. And then we'll ultimately build another plant in North Carolina. Our Carolina Lithium Project is actually an integrated project with not only another 30,000 ton hydroxide plant, but also a large spodumene mine and concentrate business.
Explain how those pieces work, Keith. So I believe that with the Quebec operation that you're actually supplying that as an offtake, which actually kind of kicks in before mid-decade. But it sounds like you're adding more refining capacity after 2025 with the plants that are coming online in the U.S. What's the difference?
Yeah, so our whole philosophy is we want to be a very large producer of lithium hydroxide in North America. We want to produce it all from spodumene concentrate that we own. We think spodumene concentrate is the best feedstock for lithium hydroxide production. We think hydroxide is what the North American market will need. People in the US and Canada drive larger cars for longer distances than most people in the world. So you need range. Hydroxide allows range. And we want to own the spodumene concentrate because there's a lot of economics in the upstream part of the business. So currently we have between Quebec, Ghana, and our North Carolina mining project, well in excess of the spodumene concentrate we'll need for 60,000 tons of hydroxide capacity. So ultimately we'll build more, but we don't want to build the hydroxide capacity until the concentrate capacity is up and running. So Carolina, it'll all be built together. Quebec and Ghana will come on stream before Tennessee. So those are up in stream and basically cash flowing and helping us to fund Tennessee. And then ultimately we'll divert a lot of that material into the Tennessee operation to be further upgraded.
Now, you received funding from the U.S. government in the Inflation Reduction Act for the Tennessee operation. I think it was $141 million for that. We've seen similar announcements, Jevor Global for downstream cobalt, Lynas, the Australian rare earth producer, is going to have processing in America as well. Why the funding for downstream? And I don't see any kind of funding for projects to become mines.
Yeah, it's interesting. So the U.S. government is very much leaning in. I mean, there's a deep interest on both sides of the aisle in Washington to build the supply chain here in the U.S. We have a lot of car companies building car plants. We have a lot of big battery companies building battery plants, now cathode capacity. And certainly we need the critical material production here in the U.S. So I would say there's support for both upstream and downstream. In our case with Tennessee, we applied for a grant for the Tennessee Lithium Project, which is downstream. We received that grant. That was actually part of the bipartisan infrastructure law, not the IRA itself. A friendly competitor of ours at Ioneer just received a large loan from the Department of Energy, again, unrelated to the IRA. That's for an upstream and downstream plant. It's a $700 million loan. We've applied for loans for Tennessee and Carolina as well in large amounts. We're optimistic those will come through in due course and provide a lot of our funding. So the U.S. government's involved with grants, loans, tax credits, et cetera. And it's really made the U.S., we think, the most desirable place to be going forward in this business.
Now, the European Union is saying that it's a little bit too desirable. They were talking about the Inflation Reduction Act being kind of unfair, drawing talent into the U.S. At the expense of their own. Keith, I'm interested in your perspective because you operate in Africa, you operate in Canada, you operate in the U.S. Can you just talk about the support for strategic minerals between those different jurisdictions?
Yeah, Canada and some of the provinces, Quebec and Ontario, certainly have been really active in supporting initiatives as well. In terms of using capital, maybe they're a little behind, but I think coming aggressively. And I think you'll see as people debate whether they should put an incremental, say, hydroxide plant or cathode plant in the southeastern U.S. or in Canada, I expect the Canadians will, try to compete. Otherwise, people might just move more to here. Similarly with Europe, Europe has another issue, I think, which is a little more challenging. There are a number of really, quality upstream opportunities in Canada and in the U.S. in lithium. There aren't nearly as many in Europe. They're just, there's not as big a mining culture. There hasn't been as much work done. It's not as big physically. There's not as much of an opportunity. So I think Europe will always lag from an upstream perspective and just really principally offer converting opportunities. So I think the U.S. and Canada is where it's going to be. It's clear. I mean, our Tennessee decision was made before any funding was made available. Carolina, obviously, we've been here for 6 years, focused on building up this business. But at the margin, certainly, the Inflation Reduction Act in particular has brought increased focus on building businesses in the U.S. and that is competitively something Europe and Canada and others will have to think about and how they deal with that, how they compete with that. My guess is you'll see similar incentives launched in other parts of the world rather than an unwinding of what we have here. But time will tell. But the tax credits inside the IRA are actually really consequential. In our case, we would get a 10% tax credit against our operating costs, which is pretty significant. I mean, we'll have a lot of revenue, but we'll also have a lot of costs. And that can go a long way to offsetting our tax liability and makes us a better credit from a lender's perspective, et cetera.
Now, Keith, your Piedmont has certainly been on the acquisition phase a couple years out and the resources that you've tied together. Now, we've had a year of these high lithium prices, and we're seeing the operating results for year ends that are coming out of some of these operators right now. And they're just sitting on huge cash balances right now. So that must really change the M&A dynamics.
Yeah, it may going forward. It's a good point. There hasn't been a lot of M&A. There's been some. I mean, we've been active with two strategic investments in Quebec and in Ghana, as we talked about, just to secure spodumene supply. So we haven't really bought a company, but we've made some investments, and we've been fortunate. And there's been some other activity, but I think you'll see a lot more. And you're right. Certainly, the current producers, and we hope to be a producer very soon, are just generating massive amounts of cash flow. In our case, we hope to use that cash flow to help fund our bigger projects. So Quebec will be producing, March, April, May, shipments to follow. We would hope to have positive cash flow this year and certainly a lot in 2024. That can go a long way toward funding our developments in Tennessee and in North Carolina. So from our perspective, production and cash flow is all about funding development on a less dilutive basis. But if you're one of the big Australian producers and you're generating several hundred million of cash per quarter and you have these multi-billion-dollar cash balances, those folks are in a pretty interesting position to decide, what to do about that. They may not have the growth opportunities internally to use that capital. Dividends and share repurchases are interesting, but ultimately driving growth and consolidation, I think, would be great for the industry and great for some of those companies. So we'll see how that unfolds.
Is there any technology that shows promise outside of try and true right now? Keith, I note that Elon Musk tweeted over the weekend that, what did he say? Lithium refinement needs to increase dramatically, but lithium ore itself is extremely common throughout Earth. I was just wondering if there's any type of, fracking and oil moment that you see that out there for lithium.
Yeah, it's a good question. A lot of people are thinking hard about it and working hard, spending money, doing studies. I think, so I'd say maybe in the medium to long term. I say medium term as in a decade or more from now. I think it's going to be really hard to have meaningful production of battery quality material from any novel process or novel ore body, frankly, this decade. And the car companies are spending billions of dollars building car plants and battery plants. They can't afford for these batteries to fail. They all have 100,000-mile warranties, et cetera. So I think they're going to want to stick with proven supply sources, proven, spodumene sort of as a raw material, for instance, and kind of conventional processing. There's a lot of talk about DLE, direct lithium extraction. It's interesting. People tend to think of it as one homogeneous process, but it's really not. It's all customized for the individual, brine ore body, and they're all very, very different from one another. So my guess is some of those may work and some of those may not. I'm not smart enough to know which will be which. But time will tell. I will say, I think this idea that there's lots and lots of lithium in the ground, so that's not the problem. The problem is downstream. I think that's actually not correct. I mean, it's half true. I think there is a lot of lithium in the ground, and as you know well, it takes a long time to bring a mineral prospect from early exploration to production, typically a decade or more. So in a bull market like this, maybe there'll be 7 or 8 years. It's not going to be 1 or 2. You can build production refining capacity relatively quickly. The Chinese have proven that. The real issue, I think, is raw material supply. That's more important than the downstream. The downstream has to come, and it will come, but it can be done more quickly. Kind of like you can build a cathode plant or a battery plant or a car plant a lot more quickly than you can build a mine. The issue for the industry for the next decade or so is going to be upstream. That's why we're so focused on investing and controlling upstream resources. We think that's where a lot of the margin will be. And I think people who focus too much on the downstream are kind of missing the bigger picture.
I would also think that people think that these lithium prices are going to last, and also that what is it? I think somewhere when you look at benchmark lithium index, you're looking at like a tenfold increase in lithium prices since the start of the decade. I mean, the feasibility of various projects have just changed dramatically over this short time span, and looks like those will be locked in.
Yeah, it's a good point. I mean, we were looking a couple of years ago at 12,000 a ton, 14,000 a ton. Prices are now $60,000, $70,000, $80,000 a ton for lithium chemicals. I'm bullish. I think lithium prices will definitely be stronger for longer. Not sure exactly what that means, but I'm more bullish than most. I'm really, having been a banker for a long time, having worked with mining companies developing projects, I know how hard that is. And it's very rare that somebody calls you up and says, I have good news. I built my project faster than I thought and it cost less. It's almost always the opposite. They always seem to take quarters longer, if not years, and maybe cost more money. So I think supply will be slower to come online. I think prices will remain strong for a long time. Now, having said that, there haven't been a lot of, there's not a great successful track record in the lithium industry of developing projects. It's a young industry. It's really encountering explosive growth. So one of the issues is traditional lenders don't have the history they might have a copper or gold or coal or some other commodity where they, for decades, they've seen projects come online. They have a point of view on the price, the cost, the ramp, et cetera. It's harder in lithium. So it's harder to get traditional project financing in lithium just because the creditors are less certain and less confident of the outlook. And with prices having moved so rapidly, I mean, there are equity investors certainly who believe it. Lenders are paid to, you look at worst case outcomes, and the worst case for them is not that prices stay high, but it's that they revert to historic levels. I don't think that can happen, but certainly some lenders feel that way.
Lastly, milestones over the next 12 months at Piedmont, Keith.
Almost too many to mention, but I'll focus on the highlights. So number one, first production in Quebec. I mean, we really are excited. We started this company as an exploration group 6 or 7 years ago. The last 2 years have been very focused on development, getting to the point where we could bring a project into production. We'll be a producer hopefully in Q2 this year, with revenue and cash flow starting in the second half of the year. We think we're very excited about that. So right now that's focus 1, 2, and 3 for us. Important catalysts in Ghana and Tennessee from a permitting perspective and a funding perspective, and engineering. There'll be a DFS coming with each of those projects over the course of the next several months. And then in North Carolina, it's really all about permitting. We're very optimistic. This will be a big year for us on the permitting front, the mine permit, air permit. The Carolina Lithium Project is very special. It's the only site in the world where you can have a mine and concentrate plant and chemical plant all on one site in a wonderful region like North Carolina. So it'll be a low-cost producer. It'll be very strategic with what's going on in the U.S., and we're really excited to get that kind of on the tracks as well.
Keith, always a pleasure.
Thanks a lot, Michael. Enjoyed it.
He's Keith Phillips. He's CEO of Piedmont Lithium. My name's Michael McRae, and you're watching Kitco Mining.